As a small business owner who also does the YouTube thing, one of the most common questions I get asked is whether or not you have to pay tax on YouTube revenue, money from eBay and all that sort of thing. And up until quite recently, I would have said absolutely yes, you need to declare that money, you need to pay tax on your profits like any other business. But just occasionally, our wonderful government actually get things right, and I'm going to attempt to explain to you today in layman's terms why you might never have to worry about that YouTube income anymore. Before I start, a few bits of housekeeping I need to get through. Firstly, if you're new to this channel, please give this video a quick like, subscribe to the channel, share it around, post comments if you want. Secondly, I'm speaking from a UK perspective in this video. So if you're not from the UK or making your YouTube income in the UK, you might need to find a different video. Also bear in mind that I'm making this video in December 2017. If you're watching this later down the line, the rules might have changed, so look up the latest legislation for your particular country. Thirdly, as I've said many times before, I am not an accountant. You need to seek professional advice on the sort of things that I'm going to be telling you about. I'm just kind of lighting the blue touch paper. You then need to do your own research and get some professional help for your business. I've generally found that accountants will save you more money than they cost you, but it is important as a business owner that you understand what your accountant is doing and you know what to ask them for as well. Accountants, please feel free to chip in the comments. It gives you a bit of a free plug for your business, and as long as it's not too spammy, I will allow it. And if it's a really good comment, it might get pinned to the top for everyone to see forever. And finally, at the very least, you need to do your own research online. You need to get in touch with HMRC, potentially on the phone. If nothing else, go onto their website and make sure you've read and understood all the material on there. As I say, phone them up. I've always found them to be really helpful. Yes, they have busy times like any other organisation. That's something you're going to have to deal with. But you do need to make sure that you understand the information that affects your business properly. Tax is a really, really complicated area. I can't cover every scenario in a YouTube video. It would end up being 6 hours long. I'm just kind of giving you my take on things. At the end of the day, I'm just some random bloke on YouTube. Don't take my word for it. So I'm going to cut to the chase and then explain a few of the concepts that might be useful to you if you're planning on doing YouTube or whatever on a slightly more serious basis. So, drum roll. It's nearly Christmas 2017 at the minute, and I'm going to give you some information that hopefully is very beneficial to you. I can tell you with absolute certainty, because I'm going to read this word for word off the HMRC website, that for the 2017-18 tax year, you potentially no longer need to declare income of under £1,000 a year. Not only that, but if you also make property income from the likes of Airbnb of under £1,000 a year, you also don't need to declare that. But I'm not going to be talking about that in this particular video. I'm talking just about income that doesn't come from property. And here's the exact wording from the HMRC website, and I'll include a link in the description. If your annual gross trading or property income is £1,000 or less, and you're not registered for self-assessment, you won't have to declare this income on a tax return. You must keep a record of this income. So effectively what we've got here is a new tax allowance separate from our personal allowance. It works in a totally different way, which means if you're bringing in an extra bit of money under £1,000 a year, under £2,000 a year if you're including the property side of things, then you no longer need to worry about it. This is going to be such a welcome change for anyone running a micro business or bringing in small amounts of money through other means. I know musicians at the minute who are making £500 a year extra through doing gigs or whatever, and they're having to do an annual tax return to declare that. I know people on eBay and Etsy who are panicking about the money that they're making from that. Don't have to worry anymore. And of course, which is the main thing I'm talking about in this video, is YouTube AdSense revenue. Now, a couple of things we need to get clear here. First of all, this has only come into effect for the 17-18 tax year. In other words, income received after the 6th of April 2017. For anything received before then, forget about this. And I would suspect for income made up to the 5th of April 2017, you're just going to have to declare that on a normal self-assessment tax return, I would assume. It's not always that cut and dry, but that's probably the case. Again, if in doubt, speak to an accountant or HMRC to clarify that. So before you get too excited, I am going to explain some of the pitfalls of this new tax policy. It's certainly a step in the right direction by HMRC, and it's going to reduce bureaucracy a whole load for small earners, and it's going to reduce paperwork for the HMRC as well. But the biggest problem at the moment is that if you're already self-employed and already doing self-assessment, you can probably forget about this as being an option, because this policy applies to all self-employment income added up. And if all of your self-employment income is already above £1,000, then this isn't an option. That means if you're employed by a company and earn £100,000 a year, you are entitled to this extra £2,000 allowance. Unfortunately, if you're self-employed and only earn £20,000 a year, you're not entitled to this allowance. That's grossly unfair and hopefully something the HMRC will sort out before January 2019. This allowance should be open as a one-off to everyone, regardless of their employment status. So, with all of that in mind, let's head over to the whiteboard and have a look at an example. So firstly, just to clarify some of the rules on this new policy. On the HMRC website, it says, the trading allowance is a tax exemption of up to £1,000 a year for individuals with income from self-employment, casual services, for example, babysitting or gardening, and hiring personal equipment, for example, power tools. What? I don't think you need to list hiring power tools as a separate thing, HMRC. If you are hiring out power tools and getting paid for it, I would class that as a self-employed business in anyone's books. Anyway, it goes on to say, if your annual gross income from these is £1,000 or less, you won't need to tell HMRC. Now, gross income is turnover. Where's my pen? Gross income. That's a really important point. Gross income is turnover, not profit, which is the normal way that you would be working things out in self-employed world. They're talking turnover. So that's the total value of all of your self-employment sales added together, regardless of what your costs were. This is your total, what you've received. So that's an important point. We'll come back to that. It goes on to say, you must tell HMRC if you have self-employment income over £1,000. And I wish they'd stop using the word income. From a self-employment perspective, it's turnover. That is the terminology that gets used elsewhere on the self-assessment site. Your gross sales or your gross income is turnover. That is what they should be referring to here. But okay, fine. So it's saying if your turnover is over £1,000 a year, you need to do self-assessment. That's fine. It then goes on to say, if you have other income between £1,000 and £2,500, you need to contact HMRC. This is where things start to get a bit confusing, because what they've just said is that if your turnover is over £1,000, you need to do self-assessment. And now they're saying if it's between £1,000 and £2,500, you need to contact them. So I contacted HMRC to ask them about this. And it kind of makes sense what they're saying, but I think it's making it unnecessarily complicated. But what they're basically saying is that if you're already employed by a company and your income that you're bringing in through self-employment is between £1,000 and £2,500, they can potentially get the tax that you owe for that bit of income. So potentially up to £1,500 of extra income, they can potentially grab that through your tax code rather than having to do self-assessment. Personally, I think unless you've got a very simple and stable income stream under your 2,500 that they're mentioning, I don't think that's an option. It's something you would have to speak to an accountant about first. And then finally, they say if other income is over 2,500, you must do self-assessment. So let me just clarify what they've said here. If you earn less than £1,000 a year, you don't have to do anything other than keeping a record of what that income was. But I can't find anything that tells you what sort of records you have to keep for that. I would suggest you keep records as if you were self-employed, just to be on the safe side. They're then saying if you earn more than £1,000 a year, you do self-assessment. They then say if you earn between 1,000 to 2,500, that you need to do it through your tax code or speak to HMRC. And then they're saying over 2,500, do self-assessment. Does that make any sense to you? Because that makes no sense to me, because they're saying do self-assessment if it's over 1,000, but then they're saying if it's between 1,000 and 2,500, call them and they'll do it through a tax code. And then they're also saying if it's over 2,500, do it by self-assessment. Now this is very interesting because I've seen this 2,500 figure get mentioned all over the place as a new tax allowance that you're allowed to have some sort of threshold of tax-free earnings, which you absolutely can't. That is a real misleading figure that HMRC are putting out there. They just need to scrap this because there is no £2,500 tax allowance, just to be clear. They're saying that if your income is up to 2,500, then potentially take the tax through your tax code. Doesn't mean you get away without paying any tax. They could really simplify it by just saying under 1,000, do nothing, over 1,000, do self-assessment. Now, I don't want this video to end up being 4 hours long, and I can't cover every type of scenario for whether or not you should or shouldn't use this allowance, but I'm just going to take you through one example and we can look at that and decide whether or not this £1,000 allowance is any good or not. We're assuming that it's the 2017-18 tax year, and we're assuming that we're in the UK. And the 2017-18 tax year, if you're not aware, is the 6th of April 17 through to the 5th of April 18. So I'm going to split the board up into income from employment. So in other words, PAYE. PAYE in the UK is pay as you earn. It's where you pay tax and it automatically gets deducted off your wages. And we're also going to look at self-employment. So let's imagine you earn £30,000 working for the man. So that's employment income. And let's also imagine that you earn, through your self-employment YouTube thing, the minimum AdSense threshold of £60 a month, which is £720 a year. So that's £720. You can now earn that without having to worry about anything because it fits into this little £1,000 tax-free thing. And you've also got your separate one for property, and that's also £1,000, but we're not going to talk about that one. So, on your £30,000 income, you've got an £11,509 tax allowance. I'm just going to call it 11.5k. So you don't have to pay tax on that bit anyway. That leaves you with £18,491 of taxable income. Again, I'm just going to say we'll say 18.5k. So on that, you're going to pay 20% tax, which is about 3.7k. And you're also going to pay about 2.6k in national insurance. I'm not going to explain how national insurance works in this video. So essentially you've got a take-home wage of £23,681. That's how much money you actually take home. I know my graph isn't to scale. Let me just write that over here. We'll just call it 23.7k. So that's how much you actually take home at the end, plus your 720 quid over here. All great, I hear you say, but let's now imagine in your first year of doing YouTube, you've spent some money on camera equipment and other expenses like going to business seminars or training or travel costs or whatever. So let's imagine that you've bought 3k of camera equipment and 2k of other expenses. So you've had £5,000 of costs, but you've only made £720. Well, guess what? You've now made a loss of £4,280. And that is your 720 income minus your 5,000 expenses. And what you would normally do with that loss is deduct it from your income over here. So let's see what happens if we do that. I'm just going to rub these out to make a little bit of room. So you've got your 30k income, change colour, but we're going to knock off that trading loss. And that effectively brings your wage down by £4,280. That means your overall gross income is now effectively 25,720 instead. We'll just say 25.7k. Because we've got that trading loss that we've brought over here. Now you've still got your 11.5k personal allowance here, but it means that your taxable income is reduced, and your taxable income, instead of being 18.5k, is now 14.2k. And the tax due on 14.2k, are you following? The tax due on that is only 2,842. Well, you've already paid too much tax. So guess what happens? You get a tax rebate. And in this case, you would get a tax rebate of £856. Now, this is a very simplistic example. Please don't use this for your own figures. But in this scenario, you might be entitled to an £856 tax rebate. You're still bringing in exactly the same amount of money. It's just you've spent money on equipment that you need to make this business work. That's a perfectly normal thing to do. You're investing in your business. I would appreciate if an accountant could sanity check my figures here, by the way. I think they're correct, but if an accountant could sanity check, that would be much appreciated. Now, the other thing that you can do, let's forget about all of this for a minute. This trading loss that you've got over here is a very useful thing. One thing you can potentially do is carry it back to previous tax years. So it doesn't have to be used for the 17-18 tax year. You could use it for the 16-17 tax year. You might have paid an enormous amount of tax in 16-17. You might be able to offset it against that. And for a new business, you might be able to backdate that as much as 3 years. So that's a really important thing not to lose, is your trading loss. And finally, if you can't find a use for it for the current tax year, or if it's a new business the previous 3 tax years, what you can also do is carry it forwards to the next tax year. So say you don't have this, but this business, say you become the next PewDiePie and YouTube goes crazy, and then you've got a huge YouTube taxable income in the following tax year, you can potentially carry forward that loss and offset it against future profits. It's fantastic. The rules around trading losses are complex and not something I would suggest you start delving into without some help from an accountant. But trading losses are a normal thing. They're very, very useful, and it's something that you're going to potentially lose access to by using your 1k or 2k new allowance. I'm not saying you would, but it's something you need to look into. You don't want to lose your trading losses. They're an important part of running any business. If you can show that a business is going to become profitable over time, and it might be loss-making at the minute, That's a perfectly acceptable thing to do. What's not acceptable to do is to permanently run at a loss and offset that against your employment income. HMRC will be on to you very quickly. So if you're doing YouTube for a bit of fun and your analytics are effectively showing that it's never going to make any money, then I would be very careful about offsetting large trading losses. On the other hand, if you're doing YouTube on a bit more of a serious basis and your analytics are showing demonstrable growth, then you should absolutely be treating it like any other business and investing in it to help your business flourish. Because that's how business works. You've got to spend money to make money. So in a nutshell, this new £1,000 allowance is fantastic for casual earners and anyone really who has no intention of earning more than £1,000 a year, or £2,000 a year if you're including property income as well. If, however, you're looking to make your business grow or making your YouTube channel grow, and you can prove that that's a real thing, you might be better off going to an accountant now to discuss your long-term tax strategy so that you can make better decisions moving forwards. What you don't want to do is invest a huge amount of money into your business now and lose the ability to offset that investment against your tax burden later down the line. That's it for today. I hope you found this useful. If you've spotted any glaring errors in what I've been talking about, please pop it in the comments. Accountants as well, pop them in there. Good comments will get pinned. I would also love to hear how YouTube earnings are handled in your country if you're in a different part of the world. Do you get a similar kind of tax allowance to this new thing that's come in the UK? How are YouTube and AdSense revenues handled in your country? It would be really interesting to know. Pop it in the comments and let everyone know. Thank you again for watching, and I shall see you next time. Tally bye!